Hello, good day, guys. My name is Nick, Technical Analyst with SuperForex. Today, we shall be looking at the technical analysis on the currency pair, the United States dollar to the Canadian dollar. And as usual, first, we shall be looking at fundamental analysis before we move right down ahead to technical analysis, which is purely what we'll be seeing on the chart. And of course, you can see that USDCAD is looking to suffer a correction before the challenging next upside probable destination. Now, USDCAD has recovered from a most recent 1.249 for decline and is settling at the 1.2896 high. However, technical indicators and seasonality studies that hint that the pair may need a corrective decline before it finds fresh oxygen to challenge higher levels. And strategists at DBS Bank, Benjamin Wong, reported this. And technical indicators also show that USDCAD rallies requires a pause before a continuation into the higher point, or rather the raise higher. And there are hints from the technical indicators, of course, that the USD rally requires a pause before it finds fresh oxygen to continue its rally higher. So noticeably, the pair is close to about 38.2% on the Fibonacci retracement of the range drop from 1.4668 to 1.2007 at 1.3024. And a clear resistance confluence at this point, hosted by the 100 and 200 week moving averages at 1.3046 and 1.3067 respectively. The seasonality charts show that CAD enjoys bouts of strength into the October and the November months, and the price action appears to be contouring a bullish inverted head and shoulders pattern, as we can see already forming, and where any USD decline is merely filling the rungs of its shoulder. Eventually, as major support levels hold up, USDCAD will still revert higher in the medium term. So now, focusing on what we are seeing purely on the chart, technical analysis, we are right now on the 4 hours time frame, and we are noticing a semi-doji candle, which looking like the killing of the momentum for the downside. But also we should notice, of course, that it's gradually getting or edging closer to the most recent resistance point. And we are looking out for a bounce back at this point and a retracement back to the upside. This is prior from the 4 hours time frame. So also on the 1 hour daily time frame, we have noticed, of course, series of resistance points at this point and also at this point. So we are looking at this whole zone as a very important area, or as a very important resistance zone. So right away, we should be looking out for maybe a drop down more to the 1.26 zone, or most likely a retracement up to cover up this resistance point, and hopefully a much more thorough breakout of the resistance zone. So looking now at our 1 hour time frame, we can also notice that the momentum to the downside is gradually dialing, and we are looking out for a correction to the upside. So if we were to make our trade entry now at this point, which is a very good entry point, we should be looking at maybe to the upside, heading to the next resistance point. We should be looking at about 102 pips from this trade, which is good money. But then alternative scenarios to this trend means we need to correct this. So a trade call for a sell in favor of the Canadian dollar means it needs to head down to the most recent support zone, which is about 114 pips away from this. So that's our technical analysis on today's currency pair, United States dollar to the Canadian dollar. I remain your host, Nick. Bye for now.